HIM stock, it's now north of $9 again. It has around plus 2% as of making this video. Year to date, it is up above 40%. 1 year up 120%. All in all, these are good numbers. You can't complain about these numbers. However, HIMS at one point was at $12.53, 54 cents off the top of my head. And it was up for the year like 200.25%, some ridiculous number. Now, a lot of people have gotten into HIMS at $3, $4, $5, $6. But a lot of people are in HIMS from $15. So they're actually down on HIMS. HIMS, for some reason, likes to go against the grain. I mentioned this, and a lot of people are making money on this. Not that it's advice, and I'm not a financial advisor. I'm not qualified to give financial advice, nor would I want to give financial advice. And so I'm sorry that I'm so nasally. I'm still under the weather. But I really wanted to talk a little bit about HIMS and how I'm personally playing HIMS. I said that as the NASDAQ is going to be going up, as the tech sector is going to be going up, HIMS is going to take a break. HIMS is going to be flat or going down. And this pretty much is what's been happening. And although HIMS's numbers for the year and HIMS's numbers for year to date are absolutely fantastic, like you can't even complain about these numbers, especially if you got into HIMS at, $3, $4, $5, $6, $7 range. I believe it's still severely undervalued. In my personal opinion, I believe that HIMS should be at least $15. Bank of America, after earnings, raised their price target to $15 a share. It went from like $13.50 to $15 a share. I think once the NASDAQ is going to calm down, the tech sector, which I don't know when that happens, I think HIMS is going to take off. Possibly that, and possibly next earnings. So as I said, the last earnings, HIMS by all measures should have absolutely taken a blast off. HIMS should have been up 10% after earnings. Not only did they raise the bar for earnings, they absolutely smashed that bar for earnings. They were supposed to be like 70% year-over-year growth. They ended up getting 88% year-over-year growth. 7Ds, not 70, 7Ds. They ended up getting 80% gross margins. Guys, think about that. 80% gross margins. That is absolutely freaking massive. And they actually raised the bar for the rest of this year, including next year. How to play HIMS. You could DCA every day. You could put in $50, a quarter, $1, $100, $1,000 every day and just ride it out. Or you can wait for a pullback, which might or might not happen. If you already loaded the boat with HIMS, a pullback wait is pretty good. That's what I'm doing. I'm waiting for a big pullback and I'm going to add more. If you don't have any HIMS, is right now a good entry point. I can't tell you that, but let's think about that. HIMS is going to have earnings. The last earnings, they smashed. The next earnings, for all intents and purposes, there's nothing to go against the grain or against the evidence that HIMS is going to smash earnings again. There's nothing that's going to say, hey, HIMS is not going to do as good as they projected or even better as the same way they did in the last 4 of 5 earnings. So 1 out of the last 5, they were even, right? They were supposed to make an X amount. They made the X amount. 4 out of the 5 times the last quarter, so year and a quarter, they not only were supposed to meet X, they actually surpassed X. And they raised the bar. So let's say the projection for next quarter is going to be $100. HIMS ended up doing like $105. But not only did they make $105 on the $100 that was estimated, the last earnings, they raised this earnings from, let's say, 95 to 100. So not only are they meeting expectations, beating expectations, they're also raising expectations. And this means something. It's not going to take the market long to realize this. Right now, HIMS, every single analyst has HIMS as either a buy or a neutral. Nobody has them as a sell. So nobody thinks that HIMS is a bad company. Now, these analysts, a lot of them have sub 50% ratios of actually getting it right. So a lot of these analysts are wrong more than they're right. So you could take that with a grain of salt. But it fits our narrative, so let's use it. HIMS has a lot of money on hand. HIMS also invests a lot of their money in hand in short-term bonds and government securities. By doing this, they're reinvesting their money and they're getting a return on their money, which is honestly adding to their bottom line for getting closer to GAAP profitability. Hims is estimated to make $1.2 billion in revenue by 2025. That is absolutely huge. Now, that is the floor, not the ceiling, the floor, as they said most of the time. So you might ask yourself, well, Adam, what's the future hold for Hims? How is it going to make money? We all know that Hims is a telehealth company, but it's extremely unique because it uses telehealth to push their products. What are their products? They're making Taboo sexy. Hair loss, skincare, erectile dysfunction for men. Women, they have similar type of lines. They're only in the United States and the UK. Most of their business comes from online. Now, Hims has a nuclear weapon, right? Nuclear bomb. Don't demonetize me, YouTube. I'm saying in terms of like finance, how they're going to grow. Hims only offers a select amount of products. Now, they have a robust amount of products, right? They have like over a dozen products, but it's still not like huge. It's not 100 products. They have two things, an advisory board and their C-level executive board, right? So like their CEOs, CFOs, all of the officers, and then they have an advisory board. If you look at the advisory board, and I covered this a lot of times on this channel, I actually showed you who are on their board, and I actually showed you who the executives are. You can see that they all have years and years of experience in the medical field. Each person on their advisory board has a specific niche in the medical field, to niche down even more. There's a huge market right now for telehealth and health in general. People are tired of going to the doctor for some small little thing. Why waste your time, your day going to the doctor when you could do it literally going online, getting your order? Hims is going to market to those people. Hims is going to get into many more products and niches in the medical field. One, for example, just one is weight loss. Think about it. Obesity in this country, in the United States, is absolutely massive. We are fat fucks over here. And I don't mean to be insensitive, but we eat huge portions. And we need some type of, magical pill. At the end of the day, you just need to keep your mouth shut and go to the gym. But people don't want to listen to that, so they want some products that are going to help you. So Hims is going to provide that product, right? If there's a need, they will provide a solution. And that's also how they're going to grow. If you don't believe me, think about these numbers. A year ago, for every customer that Hims had, or subscriber, they were making $50, okay? So every one, they made $50 on that subscriber. 1,000 subscribers, they made $50,000. Now they're making $56 for every one. So they went from 50 to 56. That's a huge increase. Now it was incremental. First it was 50, then 53, and then 56, if I'm not mistaken. How do they do that? They're increasing their product lines. And since they're gaining over 100,000 subscribers every single quarter, consecutively for many quarters, now reaching 1.2 million subscribers, and they have a 90% stickiness rate, which means that if you use the product once, 90% chance, that means 9 out of 10 people will end up being a subscriber. And it's actually closer to 19 out of 20 than 9 out of 10, right? It's 90 plus, not just 90. And as they're going to keep offering more products, well, those subscribers are going to subscribe to more products because these are all complementing products. For example, they had the hair loss shampoo and hair loss conditioner and hair loss serum and biotin, also for hair loss, for healthy hair. And they introduced a dandruff shampoo. Okay, well, dandruff shampoo on its own wouldn't sell, but a dandruff shampoo in addition to your healthcare, for your hair healthcare, sells. And that's how they're going to increase their market share. That's how they're going to increase their TAM. That's how they're going to increase their profitability. That's also what's going to happen when they're going to go to earnings and keep smashing earnings. And again, I'm not sure if that's going to happen or not, but there's no evidence to the contrary. There's no evidence that they're not going to do exactly what they did in the last 4 out of 5 quarters. I mean, they have a huge track record. Think about it. 80% chance based on the last 5 quarters that they're not going to just meet, but smash. And 100% chance that they're going to meet expectations, right? based on those numbers. So you tell me, do you want to be in a company like that or not? I, for one, do. Let's see what ends up happening in the next earnings. I'm going to try to film it live. Last time the earnings for Palantir and Hims was at the same exact time. And I wasn't able to film Hims. I love this company. There's nothing to the contrary that came out. There's no evidence that Hims is not a fabulous company. If you guys have an opinion that Hims is shitty, let me know in the comments down below. I'll be open-minded. But for now, it's just a retracement. It's just a retreat. Hims was up over 200%, and now it's up 120% over the year. Now we went from freaking ridiculous, out of this world numbers to really fucking good numbers, right? Nobody can say that these numbers are bad. However, we got a little greedy and we wanted to keep going. Hims, at this particular point in time, from where we are right now, has over 50% growth for my personal projections as of right now. Thank you so much, and have a great day.